Hello guys, I want to thank everyone who has subscribed to our channel, and someone who is yet to subscribe. I will encourage you to subscribe. If you are finding difficulty in accounting, I will encourage you to subscribe to our channel, because we are going to give you a simple breakdown and a simple definition, simple of everything accounting. We will make you understand accounting, and then accounting will be very easy for you. Follow us and then subscribe to our channel. Today we'll be talking about the nature and then the functions of accounting. The nature and then the functions of accounting. That is what we'll be talking about today. So we will talk about the definition of accounting. We'll talk about the functions of accounting. We'll also talk about the purpose of accounting for now. And then on the next episode, we'll continue to talk about the uses of accounting information, bookkeeping, what bookkeeping is, the characteristics and the usefulness of accounting, and then also the difference between cost accounting and then financial accounting. That will be for next episode, but today we will end at the purpose of accounting. So today we'll be talking about the definition. We'll talk about the definition of accounting. Then we'll talk about the functions of accounting. We'll also talk about the functions of accounting. And then we'll end at the purpose. We'll end at the purpose of accounting. So someone may ask, what then is accounting? What is accounting? In its simplest form or simplest term, accounting can be defined as the collection, the recording, the evaluation, and the communication of economic events in monetary term. In monetary term, keyword, in monetary term. So if the transaction, there is no money involved, we cannot classify it as financial accounting. We cannot classify that as financial accounting. So there must be money involved. When we quantify the whole thing, we should be able to quantify it in monetary terms. Please, do you get it? We must be able to quantify the whole thing in monetary terms. So collection. So let's say you went to the market and then you went to buy a series of things. So the series of things that we are talking about is a collection. Do you understand? Then the transaction itself, maybe you bought tomatoes, you bought this one for 5 cedis, this for 10 cedis. When you record the particular transaction in the books of account, that is what we term as recording. That is what we term as recording. Then when you analyze it and then make the whole thing make sense, that is what we term as evaluation. Where we analyze the whole thing is the evaluation. And then when we have the whole result and then we communicate the whole result to the users of the information, that is what we call the communication. So it is the collection. We've collected the data, we've recorded the data, and then we've analyzed or evaluated the data, and then we communicate it to the users. That is accounting. And then it must be in monetary term. It must be in monetary term. If it is not in monetary term, it is not accounting. If it is not in monetary term, it is not accounting. So now we know this is collection, recording, evaluating, and communication of economic events in monetary. So where there's no money involved, we are not dealing with financial accounting. There's supposed to be money involved. There's supposed to be money involved. Hope you get it. So now we can move on to the functions of accounting. The functions of accounting, and then with the functions we are going to get some of the functions from the definition. So first, the function we have recorded. Functions. Functions of accounting. Functions of accounting. We have one, recording. So first we have recording. What then is recording? Recording is whereby we record monetary events. We record monetary events in our books of accounts, that is in our ledgers. As time goes on, we will give you the definition of a ledger, what a ledger is. But it is a source of an accounting book, and we will give you the proper definition as we move along. Okay, so stay with us to know the definition of a ledger as well. Thank you. So, whereby we record our financial events in our books of accounts, that is what we term as recording. Keeping the financial events in our books, that is recording. And then we move on to classifying. You have classifying. Someone may ask, what is classifying? Classifying is whereby we group our how do you call it? Our events. We group it. Let's say we have purchases, we have sales. So when we are recording it, we will put everything together in our ledgers. But classifying is we keeping we grouping the like ones. Let's say we have a sales ledger, so we're going to record the sales in the sales ledger. We're going to record the purchases in the purchase ledger. That is, we are classifying, we are grouping it according to their like their kind. I hope you get it. So that is that is classifying, and then we move on to the summarizing. So summarizing is whereby these classified events, the events that we've classified according to purchase, according to sales, according to this, according to that, these accounts, these events, we now have to summarize them. How do we summarize it? We have to summarize them in our trial balance, in our profit and loss account, and then in our balance sheet. This is how we summarize these things. Do you understand? So we now have to make the whole thing make sense, so that when we are analyzing it, it will be simple to analyze. Let's say if you have our trial balance, you know that, oh, okay, this is the number of purchases we have, this is the number of loans we've taken, this is the whole thing, this is the profit you are making. We are summarizing it. So that's what we term as summary. So we summarize them in our statement of financial position, which is the balance sheet, or the statement of profit and loss account. Please, are we okay with this? If you have any question, please comment, so that we are very keen with the comments, because we'll be checking the comments to see wherever you have your problem. We will have to address every problem. In the next video, we will make sure we will address whatever issue you have. If there's a definition we didn't do it right, or something you do not get it, we have to come back and then do it. We will address it before the next video. So if there is any problem, any challenge, comment, say it in the comment section, and then we are going to get back to you. Thank you. So the next one is analyzing and interpreting. So when we have our statement of financial position, and let's say we have our balance sheet and all the statement of profit and loss, when we have all these things together, we have everything. When we have everything, now the next thing is to analyze. The next thing is to analyze the information before, because we need to make it so simple for the users of the information to comprehend. So let's say we leave the balance sheet. You've seen a profit of this, or the profit and loss. You've seen a profit of this, and then we've listed all our assets and liabilities down for you. You are not going to. The users might not be able to understand what It is. So we need to break it down. That is, we need to analyze and then interpret it. We need to analyze the whole thing. So the analysis is done through the ratios. We have accounting ratios that we use. So these ratios will tell you, oh, okay, so the company is actually performing or the company is not performing. This is the ratios that help in the analysis. The ratios help in the analysis. So the whole statement is there. We need to use ratio to break it down for every user of the information to understand. That is what we term as the analyzing. And then the next one is communicating. Communicating. So the communicating aspect talks about republishing the whole statement in the for users to get access to it. So for a listed company or a company that is listed on the stock exchange, you need to publish the statement on the stock exchange for every investor to have access to the information. That is the communication or communicating. So communicating is whereby we are making the whole statement or the whole information public for the users to have access to it. That is communicating. So for the functions of accounting, the functions we have recording, we have classifying, we have summarizing, we have analyzing, and then we have communicating. So when when we are done with all these, then we know we have we have satisfied the need of the user. The accountant has satisfied the need of the user. These are we okay? If anything, comment. Okay, so the next thing we'll be talking about is the purpose. It is the purpose. That will be the last thing for us to do today, or for this particular section. That is what you are going to do. But for the nature and then the functions of accounting, we are breaking it into two. So this is the first part of it. The next part will continue from where we stopped, or where we will stop. Sorry, where we will stop. Okay, so the purpose. Purpose of accounting. Why do we need accounting? What is the main reason why we study accounting? Why are you watching me? Why do you want to listen to me? Why do you even need the accounting? Why? Why do you need the accounting? Why are you even supposed to study accounting? That is what we are talking about. Why are you supposed to study accounting? Purpose of accounting. Why are you supposed to why do companies need accountants in their company? Why do companies need accountants? So first, to satisfy legal or regulatory requirements. Regulatory requirements. So purpose one. So it is required that every organization shows the performance. Every organization show its performance. If I am an investor and then I want to invest in your company, I need to know the financials of the company so that I will know what to do the next step to say whether I should invest in it or I shouldn't invest in it. So the whole this one is we are supposed to. It is required by law. It is required by law to prepare statement. So you need an accountant to prepare the statement for you, which is required by law. Else, your company will not continue operation. So it is required by law. So we need accountants in every firm, every organization. We need accountants to help us satisfy this regulatory requirement. Okay, so the next one is to provide relevant financial information about the company. So it is the financial officer or the accountant who is going to help the users, those who have interest in the company, know the financials of the company. Let's say someone who wants to invest in the company might not know the performance of the company. It is the accountant who is going to make this information available for the investor to have access to that information. We have non-financial information. That one is not the accountant's job. The accountant's job is to make sure the financials are ready and accessible to the users. So the accountant is supposed to make the information available, readily available for the users to have access to it. Okay, so the next one we're going to talk about is to provide reliable information about the changes in economic resources and obligation. Provide information in the changes in economic resources and obligation. So when we talk about economic resource, it is the assets of the company. Assets are the economic resources of the company, and then the obligations of the company are the liabilities in the company. So when we pick the financial statement, so when we pick the statement of financial position, we are going to see, let's say if you compare to previous years, we are going to see whether assets increased or decreased. We are going to see whether liabilities increased or decreased, whether our loans and then the owings of the company has increased or it has fallen. So this is the changes that we are talking about. It is the accountant who is going to make this information readily available to any user of the information. So you need an accountant. That's the reason why you are supposed to listen to me. That's the main reason why you are supposed to read accounting in school, because you are supposed to make these whole changes in the obligations and economic resources available to the users of the information. If you don't study and then you are not available, the user will not have access to it. Then the user will keep on borrowing and then wouldn't know whether the borrowing is making sense or is not making sense. So that is another one. Then to provide reliable information about changes in capital and capital of the organization. So it is the accountant who is supposed to make this information available. He's supposed to provide information on the changes in capital. When we talk about capital, it is the shares of the company. So let's say you are starting a company and then you invest 5,000 Ghana cedis or 5,000 USD. The investment you have made is what we term as the capital. Is the capital. So where capital increases or decreases, it is the accountant who is supposed to provide this in. We have an account called the changes in equity. Changes in equity. So that changes in equity will show whether there's been additional shares that has been bought or that has been sold. So that has been sold, or there's been so where we sell shares, we get money. We sell shares and then we get money, which means our capital has increased or our shareholdings have increased. A lot of people are different. We've gotten different capital to the company. So that's basically the changes in equity. And then the next one is to provide information about an organization's accounting policy. Organization's accounting policy. So we have a policy, the inventory policy. We have depreciation policy. It is the accountant who is supposed to, or it is the accountant is supposed to decide on the policy, the depreciation policy, or whatever policy the company is going to use, and then make it accessible for everyone to understand. So let's say we have a policy we have this depreciation policy where we have the straight line method, and then we have the reducing balance method. So it is the accounts that will decide which of the method suits the company. So where the company goes for the straight line method, they use it. Where the company goes for the reducing line method, we use it. As time goes on, we'll talk more about this reducing balance and then the straight line method. But for now, we need to study accounting to know the changes in policy. Are we okay? This is where we will draw the curtains for today. Follow us and then continue subscribing, commenting with your problems, and then we'll get back to you, solve the whole problem for you. Thank you for listening to KS Tutorials. Goodbye. This is where we'll draw the curtains. Goodbye.